You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. Yet again, you know what that means. Time for the old OBC, a.k.a. Options Bootcamp, a.k.a. the show. For you out there, the basic stock trader, maybe you're thinking about dipping those toes into the options waters. Maybe you're one of the millions who did join those options waters for the first time in 2020, many of whom found their way to this program. If you're one of those out there, welcome. Hope you're doing well, surviving the tumult, and hopefully making a little money over there too. We'll see if we can help you along with all of that. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. I know a lot of you come straight to boot camp. Just want to remind you, there's a huge network out there you're missing if you just subscribed to boot camp out there. You're getting Options Playbook Radio, another show most of you, everyone listening to this show would love because it's aimed exactly at the audience of this program. Of course, Option Block twice a week gets a little bit more advanced out there. But if you're getting a little bit more involved out there, you can check that one out. Vol Views, if you're interested in volatility trading, all things VIX and spikes and all that good stuff, VXX. Vol Views is a show for you. If you're out there, if you're a financial advisor, you learn about these things, maybe you're looking for a financial advisor, want to know what they should bring to the table from an options expertise perspective, the advisor's option. Futures options, if you're into those, TWIFO every Friday, actually maybe Thursday over there, the folks at CME and FTSE Russell, and a whole bunch of other stuff smattered in there. Interview Tuesday, you name it. Crypto Rundown on Monday. If you like crypto derivatives, you get into all that. So you're missing all that if you're not subscribing to the full network. A, and B, if you like what you hear, many of you already have. You've been flooding us with reviews. I appreciate you guys. If you like what you hear, keep rating and reviewing this wherever you get this program. It does help. There's a lot of new people out there, so it does help them discover the content. And if you help them discover the content, then they can also discover this crazy guy over here, my cohort, my partner in crime, the black-hatted one. Someone wrote in recently, Dan, and they're like, why do you call him the black-hatted one? He is the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, also the author of one or two options-oriented tomes. Welcome back to the show, A. And B, sir, why do I call you the black-hatted one, sir?
Good guys wear black, Mark. Come on, man. Johnny Cash.
It is the 21st century. Everything old is new again. Everything is flipped on its head. Yeah, I forgot who wrote that in. I'll dig them up. But yeah, that's just a fun thing we started throwing around in the early days of this show, and we were really embracing the drill instructor format and theme. So we had to have our whistles and our hats. And so I went white hat and I threw the black hat on Dan because I thought it would be more fun. And it's just kind of stuck there ever since. As we head on into our first topic, it is time to discuss just the madness. They don't even really have a transition for this, Dan, because there's nothing really suitable for it. We're kind of in that weird time. In fact, we were recording live last week when we saw the tumult, the tizzy, the uproar, the furor over all things GameStop just evolve into the next step. It kind of caught a lot of people off guard. I think it even surprised you in the middle of the show. A lot has unfolded since then. We've seen backlash and then backlash to the backlash and conspiracy theories and threats of regulation and dogs and cats living together, mass hysteria, all sorts of crazy stuff. We're in a crazy world, Dan, when Citadel and things like that are trending on Twitter. Things have gone topsy-turvy at that point. So there's a lot to unpack. A lot has happened just since our last episode, Dan. So let's start there. What are your thoughts on how this has unfolded, the madness we saw in GameStop and the aftermath, the response, some might say the bungled response from the BD, sir?
Well, it's interesting because the response has not really happened yet. They're looking into it and the government may or may not do anything. It's a little bit of a convoluted morality, because if you've been on Wall Street bets, which more than 6 million people have, at least observing, like one of the main reasons why people are doing this is more sticking it to the man than making money. But the question is, who's the man? We've got hedge funds who are these perceived evil rich guys. But like a hedge fund is a fund, it's just some guy like you or me, or probably many of the people watching this show who decide they want to be a trader when they grow up. And they have a fund that has investors who are regular people who take their life savings and invest some part or all of it into a hedge fund, so it's a gross oversimplification to say that, these hedge fund guys, they're the bad rich guys. And it sure as heck is not just 22-year-old kids with $200 accounts watching Wall Street bets. It's everybody. And some of them, are big traders. So it's very interesting when you really peel the layers off the onion.
There are many layers. It is indeed a stinky onion once you start peeling it back. Yeah, this took a lot of people by surprise in many different ways, not just the rapidity of it or the ferocity of this. We've seen short squeezes many times. This has got to be the most ferocious and longest lived of any of these that we've seen in quite some time. All of it kicked off really with this aggressive shorting of GameStop, somewhere around 150%, even more of the outstanding shares were shorted, which once you see that number, I think anyone who's been in the markets for a while, it certainly is like, well, wait a minute, that already is a bit of a red flag. And to their credit, some of the Redditors spotted that and said they viewed it in this moral lens of like, hey, this is bad. These evil short sellers are beating up on this company. And it does seem like we have every decade or so, Dan, we have some event, some shock to the system. And a lot of people doing this now are new to the market, so they haven't really experienced these before. So I understand why this is new. About every decade or so, there's a fresh shock to the system that causes some sort of moral panic about short selling. About a decade ago with the great financial crisis, we had a short selling panic here again in the U.S. In fact, we actually banned it for a short time until saner heads prevailed. A decade before that, we had the dot-com meltdown. People were debating the impact of short selling there. We've seen economies around the world take steps to ban short selling. It usually ends with disastrous consequences. This is not a new phenomenon. We're kind of overdue, you might argue, for something like that. But what is interesting is that there are supposed to be regulations in place to prevent this. There are things called Reg Show. I don't want to get down the rabbit hole, but there are regulations on short selling. People out there think it's just willy-nilly Wild West, but there are at least supposed to be regulations. And one of those is Reg Show. And it says that the shares that you borrow should be easily and readily available to locate. Quote unquote, there's a locate provision in there within a ready amount of time. And clearly that failed demonstrably in GameStop. There's no way if you have 150+% of the shares shorted, any of those can be located with any frequency, let alone you're borrowing someone else's shares that someone else has already borrowed to short. That all of that is broken. So that definitely needs to be fixed. In that sense, I'm with the Reddit masses who were up in arms about that. I had a good conversation with the folks at the Securities Traders Association, the association that kind of oversees and talks about a lot of this stuff in the business. And they were disgusted by this. In fact, they echoed the same sentiment. They had asked them a week before. They said they wouldn't have said it was possible to short more than 100% of the float. So this came as a surprise for a lot of people in that sense. So I think there will be reform on that front. In that case, getting Reg Show to actually have some teeth to it might probably make a lot of sense. I'm not a big regulation fan, but in this case, when you could short more than the existing outstanding shares of a company, that's probably a good thing to rectify out there. The moral aspect of slamming short selling, and you talked about this before, Dan, but I'm curious your thoughts on this. Like I said, this is kind of a frequent albatross. It gets thrown out there a lot. Oh, these short sellers are evil. And they don't do themselves any favors, certainly. They come out there, they beat the drum about how smart they are, about everyone else is stupid, how the stock is terrible. So a lot of them do a lot to earn this reputation out there of being terrible people. But at the end of the day, short selling is a viable function in the market. I mean, Dan, think about it. If we had a marketplace where you could only sell to close effectively in terms of a stock, think about how crazy that would be, Dan.
Yeah, I mean, the market exists for the price discovery process. Like, people look at it as a way to get rich, a way to store your wealth. Okay, yeah, it's for that. But it's also essential to understand what the value of a company is and who's going to value it. Like an accountant, the government, like somebody who could have a bias. No, we let the free market discover what the value of the company is by analysts doing the research and people voting with their dollars. And so, I mean, if you don't allow short selling, you just allow the chance for inflated prices and it weakens the price discovery process.
Speaking of inflated prices, we certainly saw inflated prices and indeed inflated volatility. GameStop got north of 1,000%. I believe on our last show we were talking about it. I think it was somewhere around 350% vol. It got well beyond that, listeners, in the intervening sessions out there, north of 1,000%. That's not something I've really ever seen in any sort of real major tradable name, outside of a couple maybe crazy pink sheets and maybe had some lingering options on them and they were trading, a few bucks or fractions of cent. Maybe you see weird scenarios like that or some crazy biotech that's about to explode, something weird like that. But outside of those aberrant scenarios, never really in a major trading name that's doing a lot of paper, 1,000+% volatility. We had one of our co-hosts on one of our shows this week saying that's like the market maker saying, just piss off to the crowd. Just go away from us. This is crazy. Let's let this settle down. We're going to set it at north of 1,000. Trade at your own peril. And that's exactly what it was. And of course, Dan, we've since seen this spread, this attempt to squeeze these names spread to other names. Of course, AMC is a much ballyhooed one, but also we even saw it spread to commodities like silver, which is a bit of a different game. Now, silver, not quite the same market. It's not quite the 150% shorted GameStop trading a few bucks. Silver is a different beast. So I'm curious, Dan, what are your thoughts on how this GameStop short squeeze furor, how it spread to other names like AMC and now even silver, even though it seems like the bloom was off that rose now as well, Dan?
Well, I mean, that was a pretty darn weak event. It was kind of a non-event. It's like, oh, look, it's happening in silver. And somebody let the air out of the balloon, and that's the thing, like it helps to get into, well, any trade early, right? But especially these explosive moves, you sure don't want to be the guy buying GameStop at 400. But you kind of have to wait until there's a move established. I've been talking to my son who's been trading this, and I just refer to it as the Jenga tower.
Is your son slinging silver? What's your son up to?
Oh, he's been doing GameStop.
Oh, is he doing the fractional shares over there at like the Robin Hoods?
Yeah, I mean he's got a little bit.
That's another phenomenon that kind of added fuel to this fire. Back in the day, you used to have to buy a round lot. Then it still became, you could buy, less than a round lot. You probably buy a 10 or 20, 50 shares, something like that. Now with names like Robinhood offering fractional, you're effectively just putting money into the machine and then hoping you get more money out. I want to buy $300 worth of GameStop right now and put it into the machine. Robinhood then, through some mystical voodoo that became apparent that it was breaking last week, has to then source that liquidity liquidity for you, put those orders together, match them up to buy at least one full share, obviously, and then put that out into the marketplace. And a lot of that is probably fueling this frenzy as well, which is something we haven't seen before. And now other major brokers now offer this too, Schwab and others. You can buy fractional shares. So that's just effectively, hey, I got $500 burning a hole in my pocket today. What should I do with it? I'm going to put it in to the Robinhood app, and let's see if I can double it in a day with GameStop. And that's certainly, I think, going to be an attractive thing for a lot of people, which is obviously why so many people are flocking in to these names. And then it loses all the other elements we're talking about, short squeeze, the moral ambiguity of it, all these other things we're talking about just becomes, hey, put in money, try to get out more. Then the analogy to the casino becomes a lot more apt and a lot more disturbing over there at the same time. Because then you are kind of just rolling those dice and hoping, it comes up, in this case, black or whatever the heck you're leaning on the roulette table over there. I'm curious, Dan, what was the response in your MTM community? You have a pretty active community over there. Were they trading this? Were they staying away from it? What were their thoughts also on the rolling, effectively, outages we saw at the different BDs? I remember we had Toss starting to clamp down on things, and IB right in the middle of our show last week. That spread to just about every platform. Of course, Robinhood took the bulk of the ire out there for banning GameStop trades. What was the response of your community to all this, sir?
We didn't really have a major response from our community because our trading style and all the systems that we teach are really more about consistency. And don't get me wrong, like if I observed something where I could make one of these explosive profits and the risks seemed to make sense, I would definitely be all over it, I'm definitely not poo-pooing it, but, right now with GameStop, it's just a lot of gambling. I mean, by all accounts, the stock is insanely overvalued, and it's just betting on this short squeeze and just buying a stock that everyone knows is way overvalued because this one thing might happen again a second time. It's just gambling. So that's not really the style that our traders do. So they mostly stayed away from it.
You're not teaching over there at MTM to just keep putting money into the machine, sir, and then it doubles, it comes back out to you?
Yeah, no, but hey, if I could find a machine that it worked that way, I'd do it. But to date, I've not been able to.
You've been around this business for a while. Obviously, everyone is sinking their teeth into this now. Warren's got the bit in her teeth. Ted Cruz. When Ted Cruz and Warren and AOC all agree on something, the end result's probably not going to be good for society, but that's where we are right now. They're all looking for hearings, looking to get their pound of flesh. They want to drag Robinhood and all these other BDs out there into the limelight. There's all these conspiracy theories floating around that it was the hedge funds, it was the Citadels and the Melvins and others who were laughing maniacally behind the scenes while they were orchestrating all of this dance like puppets. So I'm curious, Dan, you've seen these events unfold. You've seen the blowback we've gotten from DC and the regulators as a result. What do you think is going to be coming down the pike in terms of reverberation from this? Or do you think maybe not much?
Yeah, I mean, I don't know about you. I don't know about, our listeners, but I'm so freaking sick of injecting some sort of political bias into right and wrong. It's just so annoying. I mean, look, here's the thing. If somebody on the, let's just call it the professional side, did something that violated the rules, like I'm a big fan that they should get in trouble. Like that's what keeps our markets safe and protects every individual in the market and the system as a whole. And if these guys on Reddit like really are pumping and dumping, then there's laws in place that's illegal as well. And so there doesn't need to be any more laws. You don't need senators coming out in favor of one side or the other to politicize it. It's absurd. Like everybody follow the rules and the market can be a great career for you. But, I mean, if somebody's doing something wrong, I'm the first guy to say they should be responsible for whatever comes their way.
Let's get into that. Actually, we're asking our audience that right now. A current poll out there. You guys can participate over there at Options on the old Twitter machines, listeners. We ask you, there have been many debacles that left lasting impacts on the options market. The 87 crash, long-term capital management, the dot-com crash, the great financial crisis, just to name a few. There are many. Should we add the GameStop frenzy to that list. Gave you two very succinct choices. Yes, we're living in a post-GameStop world, or no, this is a tempest in a teapot. Mr. Dan, A, what is your vote? And then B, more importantly, what do you think our audience is voting for?
Well, I mean, look, like this is something that could potentially become a thing. Like right now, it's not a thing. Like, you know, there's always like little mini bubbles. I mean, you know, the flash crash, because it's this rhyming, you know, 2-word thing, is probably remembered by some people, but nobody probably remembers what it is. Like right now, it's just that. It's just this thing. And don't get me wrong, there's a bunch of people who are going to be telling the story about how they were up 50 grand and then lost it all. And it'll be really exciting for a generation to come. But like right now, it's not a thing. If it becomes a thing where it adds instability to the system, then wow, then my answer would be yes. So yeah, I mean, I guess my answer is no right now. It's really more, let's wait and see. What would the audience say? Now, I don't have my Twitter open yet. I would say the audience would agree with me because I'm really freaking smart.
The audience taking the other side of that. 60.3% saying, yes, we're living in a post-GameStop world, and no, tempest in a teapot, 39.7%. It has been trending down a little bit. It was north of 2/3 not too long ago, so they're coming in a little bit. I think I have to agree with the audience on this one. So many people have the bit in their teeth about this. I have a hard time believing we're not going to see ramifications from this for some time to come, whether that's new regulations, whether that's better enforcement of existing regulations like Reg Show, which clearly was not enforced at all in this scenario, whether maybe some sort of ham-fisted attempts to clamp down on some of these social media platforms and posts there. We'll probably see some of that as well. So not all of it's going to be good. In fact, usually regulation, listeners, when it comes down, is probably not good. So yeah, I think we are living in this post-game world. It's one of those moments we're going to look back on and say, oh yeah, that changed this and that changed that. And we're certainly left an impact on a lot of funds out there as well. Speaking of what you guys thought, we had a lot of comments and questions and polls flying hot and heavy since our last episode. Let's pay off a few. In fact, after our last episode, Dan, when things really started popping off out there in the brokerage space, and we saw IB shutting down opening trades and then other firms doing so, got a lot of hot and heavy response from that. So we asked you guys, and this one, a lot of people chimed in on this one. We asked you guys, we've seen many major brokerage firms banning opening transactions in GameStop and other heavily shorted names. Are they doing the right thing? We gave you 4 choices. Yes, to protect the customers. Yes, to protect themselves. No, it's my money, my rules, or other. And no, my money, my rules won with nearly 75% of the vote. About 18% saying, yes, the firms are doing the right things to protect themselves. About 6% saying, yes, they're doing the right thing to protect their customers. And only 1% really saying other. And a lot of people chimed in on this poll, Dan, including our friends over there at Schwab. They chimed in to say neither. They voted for neither. And they said neither Schwab nor TD Ameritrade halted buying or selling on any stocks. This week, they adjusted margin requirements to ensure clients had sufficient assets to pay for stock purchases and restricted certain advanced options strategies. So they took a little umbrage with our poll, but then I looked at their response, and their response was, shall we say, very muddled in terms of what they meant by advanced option strategies. And that's kind of been the problem with all of this. You know, the messaging from all of these platforms, Robinhood, IB, TD, TD coming out saying we're not banning things. They effectively were. They're adjusting margins, but they're effectively halting you from opening. You couldn't make trades last week on the show, for God's sakes. No opening verticals. Things like a vertical spread, if you have the cash to pay for it in your account, shouldn't be considered an advanced transaction. That is banned, and yet that is exactly what we saw last week. So the messaging from this on all of the platforms needs to be addressed. That's something I talked about with the STA folks yesterday. I think that's going to be a big push in the industry going forward to try to formalize this a little bit more, make it easy to understand ahead of time before it all hits the fan. Hey, here's what your account actually is. Here's the rights we have to adjust things. Here's what we're doing in clear English, and here's why we're doing it. Because if you don't do it, then you have this crazy universe where all these absurd theories spring up and the conspiracy starts swirling. You're doing this at the behest of XYZ fund out there. And all that stuff gets thrown out there and it overwhelms what's really going on because there's no real clear messaging from folks out there. So Dan, I know you're a TD customer out there. What are your thoughts on our poll, our audience's response, and Schwab/TD's response to our response, sir?
Yeah, I mean, I don't know exactly what Schwab and TD were saying. Maybe they mean certain platforms, but I mean, I said on the show, I mean, look, I mean, they can look at my account. I tried to open a vertical spread in AMC on my on my platform because I saw an arbitrage opportunity. I could have bought a call spread at 0 and they wouldn't let me do it. And so I said, okay, fine, I'll just leg it. I bought the long call and then I went to sell the short call and they said that they're not opening new short positions. So I was kind of hosed. And it was such a busy day, you know, you can't get through on support. So I had to try and work out of them, which I did. I mean, I ended up losing $10 of cash, so no big deal. It's a scratch, but I don't know. I mean, maybe they're talking about specific platforms, and I'm not pointing any fingers at anybody. I'm not trying to start a fight at all, but I'm just telling you, I was not able to execute a vertical spread or leg into it.
Well, that is clearly considered an advanced option strategy by Schwab, because according to Schwab, neither Schwab nor TD Ameritrade, which covers TOS, that covers Options Express on the Schwab side, they say none of those platforms banned opening transactions and only limited advanced options. Again, that's obviously subjective. And again, another reason why they should probably clarify what the heck they're actually talking about when they mean advanced trade. This is another problem that could easily be remedied. You can't do this, this, and this, and here's why. That would make it a lot easier and put that out there up front. I got a feeling a lot of these brokers are going to be doing that in the future because the backlash to all this was pretty nasty and is ongoing. We might see the regulators are going to see the brokers drag before Congress, I probably would imagine, as well, getting their tongue lashing from Ted Cruz and Elizabeth Warren out there. So that's probably going to implement some changes as well. Before we roll out of this, we had more people chiming in on stuff. This has kind of been the cause celeb out there of late, listeners. So if you're fed up with GameStop, I get you, but the impacts of this are far reaching. We had another conversation after our last show, Dan, with our listeners, where we asked you guys, hey, the GameStop frenzy is shaking the options world to its core. Some people are actually suggesting that out-of-the-money calls should be priced much higher going forward to account for these potential eruptions. Do you agree? We talked about this when it was live on the show last week, Dan. I do believe you came down on the first. You said, yes, this changes everything. Then you changed your tune like a politician afterwards and said, no, I'm going the other way. I'm saying, no, this is a joke. Well, our audience went your way, about 74% saying, no, this is a joke. They're not going to price out of the money calls structurally higher. If they did, it would be a bonanza to a lot of retail traders out there and funds who sell these, and it'd be a disaster for market makers who have to suck down all these calls at these inflated prices. Yes, this changes everything. Got about 16%, and then he got about 10% saying, what the heck is happening? I'm with you there on the ladder there, Dan. So yeah, interesting stuff. What are your thoughts on this other GameStop-related poll that we discussed on the show last week, Dan? And you're kind of hemming and hawing about your response.
Yeah, recall that the hemming and hawing is because I was concentrating on my trade. I didn't actually reverse my view. I
should blame TD for all that madness. What it was.
Yeah, so that'll teach everybody. Don't multitask when you're trading. So, I mean, look, man, this is kind of a strange question because, like, what are we going to do? Call the Council of Elders and tell them to make out of the money calls higher? Like, if they should be higher, buy them. Like, you're doing it wrong otherwise. Like, if you think they should be higher, you should be long them, you know? And if you think they should be lower, you should be short them. So, I mean, that's where I live.
You don't have the Options Council of Elders on speed dial like I do, sir?
Apparently not.
Say, hey, this call skew in GameStop is nowhere near sufficient. It must go up 18%. There you go. Just make those calls. It's so easy. I'll get you that number after the show, Dan. It's much easier when you have that number. Unfortunately, listeners, that music means we come to the end of episode 1 here of our dual-part Options Boot Camp Spectacular. Don't worry. I know you guys have a ton of questions. We're going to get to all of those. If you're listening live, you get to have them right now. If you're listening after the fact, you'll get them next week on Education Wednesday. Well, Dan's out traveling hither and yon on assignment. But before we go, Dan, if folks are intrigued, perhaps they want to join said MTM community, where should they go? What should they do?
Make your way on over to markettaker.com, and we're readily available. You can create an account and join our chat room for free, which is a really great resource. There's some really smart folks in there, and we'd love to bring you into our community.
There you go. Check it out, MTM. Give him a search. Give him a search on the old Amazon. Find some of his 48 options tomes with 2 S's, Passarelli, 2 S's and 2 L's, Passarelli. Pick up some of his tomes out there, including Trading Options Greeks, one of my favorites. And on behalf of Mr. P and indeed myself, thank all of you out there for downloading, streaming, subscribing, continue rating and reviewing. Really does help new folks discover the show. And we'll be back post haste with another episode of Options Bootcamp.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.